And welcome everybody to today's webinar, where we are going to be focused on relocating or investing in Europe. So thank you very much indeed for taking the time to join us today. Over the next hour, we will be covering key property, immigration, tax and currency considerations for those that are looking to relocate to Europe or invest in property here. Whether you're planning a permanent move, a second home, or simply exploring your options, there should be some great content here over the next hour for you to take away. So we've brought together some fantastic specialists covering UK and European property markets, immigration, visa, and tax wealth planning, as well as currency exchange. So we will do our best to cover off a majority of the questions that were submitted in advance. A lot of those questions that were submitted in advance are actually from US citizens looking to relocate to the UK or UK citizens looking to relocate to Europe. And so naturally the questions will follow this focus that we cover off. However, after this webinar, you will get everybody's contact details so you can follow up for a one-to-one conversation for more information on your specific situation if we do not cover it today. And equally, we have got the option to submit questions live, so I will keep an eye out as well and do our best to cover off any individual questions that come through as and when they do. So please do feel free to use that as well. Otherwise, let's have a look and introduce today's panel. So Edward Taylor, Director at Fine & Country Marlborough and Devizes. Thank you so much for joining. Do you want to give us a quick hello and insight into your area of expertise?
Sure, yeah. Hi, everyone. Thanks for joining. So I'm an estate agent and have been for nearly the last 20 years, with over a decade of experience of the London market. And then now I own and run a Fine & Country license outside of London, about 1 hour west. For those not familiar with Wiltshire, we're in beautiful sort of green fields over here, but we do get, you know, a fair bit of international sort of activity as well. So yeah, that's me in a nutshell, really.
Brilliant. Thank you, Ed. And Natasha Shell, you're a senior partner and head of UK practice at Laura Devine Immigration. Do you want to just tell us a bit more about yourself? You're on mute, just so you know.
Great. Yeah, thank you. Hi, thank you. Yes, I'm Natasha Shell. I am a senior partner and head of the UK practice at Laura Devine Immigration, which is a boutique immigration practice specialising in UK and US immigration. We assist businesses and individuals who would like to relocate to the UK, assisting with immigration and nationality matters. And thank you very much for inviting me to speak on this panel today.
Brilliant. Excellent to have you. Thank you, Natasha. And we have Simon Pitkin, Client Success Director at Hoxton. So welcome, Simon, over to you.
Thank you, Nikki. Yeah, so I specialise in cross-border financial planning. So I've been in the industry about 20 years, focused on the international market, and we cover everything from wealth planning across multiple jurisdictions, and for mobile clients that move kind of anywhere globally, we have a presence and we cover that. And that's from all angles of wealth planning, tax, legal, and everything that goes alongside that as well. And we have offices and people on the ground in most locations globally.
Excellent. Thank you very much. And last but not least, we have Steve Eakins, Key Partner Director at Lumon. Tell us a bit about yourself, Steve.
Hi, everybody. Yep. Thank you for the invite for me being part of this today. But yeah, I work for a company called Lumon. We're basically a very property savvy, immigration savvy currency brokerage firm. So we basically help people move money internationally around wealth relocation, immigration, property purchases. And basically what we do here is offer a better exchange rate than that of the banks, meaning that budgets go further and budgets indeed can be protected against currency risk, which is the other big theme and thing that we're most in demand for. But yeah, I've been doing this for nearly 20 years. We've got a dozen offices now, a couple of hundred people. So we're moving about 25 to 30 million sterling in capital on a daily basis. So that kind of size and scale, if it helps.
Brilliant, excellent. So we are in good company for all the questions that I've got for you. Thank you, guys. And just to confirm that the webinar is being recorded, so a copy will be sent to everybody that registered. So there's no need to take notes. You will be able to watch everything back. And finally, just a brief disclaimer, because today's discussion, of course, is general information, really. We can't get into the detail for individual situations. And so everything that we share doesn't constitute to any financial, tax, legal or immigration advice, and we'd always encourage you to seek your own independent professional advice before making any decisions. And of course, that's why we'll share the contact details for everybody on the call so that you can reach out afterwards for that one-to-one conversation. So let's get started with some of the questions that we've got. And I'll start, Ed, with yourself, if that's okay, just looking at the property market. I mean, I guess what in your opinion, Ed, and obviously you deal with selling properties on a day-to-day basis, where do you think individuals should start, whether they're looking to buy in the UK, across Europe? Where do you suggest people start looking?
Well, I think that has all changed quite recently, and what we're finding is that some of the more sort of clued up purchasers are actually doing a huge amount of research using AI now, and using the sort of the AI searches, and that's pulling information obviously from huge number of different sources. So I think that's been you know, I think really useful for people to be able to sort of collate some information, because it's a vastly complicated thing, an international move, of course, and the amount of time you need to plan ahead by as well is huge. So you know, the average time from agreeing a property for sale in the UK, for example, to actually getting the keys and moving in is a staggering 154 days. So that's over 5 months. And I think, you know, for people who are used to different systems in different countries, they might assume that maybe it's a bit quicker than that. Unfortunately, it's not, much as, you know, things are. We hope things are going to change in the UK. It is a laboriously slow process. So, you know, you can do some research on the areas, on the jurisdiction, on the legalities of, you know, sort of buying in the particular location you're keen on. But I think it all starts with, you know, some very good, well sort of resourced research to give you some information to begin with, to then sort of lead you on to the next stage.
And when I mean, we've obviously got a lot of US buyers, particularly looking to move to the UK, for example. What do you tend to find some of the key requirements, or what do you think people should be prioritizing as part of their search when looking for a property?
Yeah, I think, well, aside from getting all the sort of logistics sorted, the finances, the currency conversion, and the things that, you know, are kind of the important bits, I think understanding the sort of nature of, yeah, especially UK property and parts of Europe are very similar in that they've got a huge variety of different property styles, some of which, you know, frankly just aren't in the US or in you know, other parts of the world. And some of these properties, you know, my area, for example, date back many centuries. You've got, you know, thatched cottages which look like that, which are really pretty sort of chocolate box cottages, you know, no damp proof course, you know, things that just are kind of, you know, totally alien to people who've only lived in properties that are, you know, 100 years old or less. So understanding the sort of property types is very important. And we find actually that some of the more historic properties and the properties with an interesting background and something that you wouldn't necessarily find in the US actually appeal more to some of our US buyers, and get a lot of attention because they're you know, not found elsewhere. Obviously, what people are looking for does vary in terms of their sort of stage of life and the reason for the move. Clearly, schooling is a key factor for a lot of families relocating, and whether that be, you know, a state school or in the private sector. And, you know, Marlborough famous for Marlborough College, where you know, our current Princess of Wales studied, attracts an international audience anyway. They've just opened a day house actually this coming September. So actually we're getting a few people moving back to the UK who are moving to the area but are able now to get into the college. Connectivity, I think, really key. You know, for a lot of the international people that are moving to the UK, you know, they still want to be able to get to Heathrow pretty easily, or one of the major airports. So factoring that in, being maybe an hour from a major international airport, something like that, but also the digital connectivity and having, you know, really good quality sort of full fiber broadband, which isn't always the case in rural parts of the UK, although that it is being rolled out. So those are some of the key factors, really.
Yeah, and as somebody that potentially might be buying a property to have purely as an investment, and perhaps they are moving, predominantly live in a different country, US or other parts of Europe, how easy is it to manage a property if it's not a purchase that you're actually going to live in?
Yeah, so if you're going to be renting out the property, for example, you do have the option of having a managed service from your lettings agent. However, these vary massively, and you've got to do your research on the level of service you're going to receive. Some are totally hands-off, and frankly, I think if it were me buying an investment, you know, I just want someone on the ground there to do everything for me, sort of almost concierge type service. Call me if there's a huge problem, but otherwise you're authorized to sort of do most stuff and keep everything going. You know, equally, if it is a second home that it's only an occasional use, there are companies that will manage it for you and do a key holding service. Check out property, especially as you go up in price to the more premium end, you know, and these properties will require more management, especially sort of outside spaces, gardens, etc. So you may have a team of people or an estate management team sort of in place anyway. So yeah, it's certainly possible. I think it's a case of doing your research and making sure that the people on the ground are trustworthy, and you know, you're going with a reputable firm that you know aren't going to cause you a headache when you're, you know, all that way away, really.
Yes, really good advice. And are there any kind of common mistakes or pitfalls that you see international buyers make when they're purchasing overseas? What were some of the kind of, I guess, things that individuals should be looking out for?
I think it's understanding the system and the rules of engagement in the location you're trying to buy in. And even in the UK, Scotland has a different system to England. So just to confuse people, you know, it works very differently. And one of the reasons, actually, as I alluded to earlier, that the process is so slow in the UK is that all of the information about the property often comes to light after you've put an offer in, whereas many of the European jurisdictions, what they'll have is upfront information. So you'll have all the information about the house, and the sale will be legally binding at a much earlier stage than it is in the UK. So there are clear advantages to that. So I think understanding that, doing the research. One of the things that's very common in the US and in parts of Europe are for there to be a buying agent and a listing agent. And you know, if you're buying, you have your agent that you're signed up with. And in parts of Europe, some of the listing agents, you know, you have one listing agent which will essentially share a fee with the buying agent if they're able to introduce a purchaser. That happens much more rarely in the UK, and usually you just have a listing agent. Often you're dealing direct with them. Buying agencies do exist, and I would thoroughly recommend speaking to someone, especially if you're buying, you know, at something above $1 million. Then it's worth employing a buying agent to do the research for you on the ground, to go and view properties before you have a look. If they've got a really good understanding of your brief, they can create a short list. So again, I guess this all goes back to my original point of sort of planning and research and being in a position. So there's a lot you can do, you know, from the armchair to put yourself in a better position when you're on the ground. And if you've got limited time here, you want to make the most of that, really.
Excellent. Thank you, Ed. Lots of planning and research then when it comes to looking for your next property purchase. So buying, of course, is only part of the picture. And for many of our Americans and any international move, visa and residency questions, of course, are a big piece of the puzzle as well. So Natasha, I'll come over to you next, if that's okay. And I guess really, what's the main kind of visa and residency route, particularly for a US citizen looking to relocate to the UK?
So when considering which immigration route is best for you, you should ask yourself first, what is it that you're trying to achieve by moving to the UK? And that's both not only in the short term, but also the long term. And also to first check your and your spouse's family history, because it may be that you're British or you're entitled to register as British. You'll be surprised the number of times you've had a client come to us and they didn't realise that they were British and they could apply for citizenship. So that's really important. But presuming that you and your partner have no claim to British citizenship, then the main categories for the UK include sponsored employment. So this essentially is where you would have an employer in the UK who would sponsor you to work in a particular role. But this does restrict you to one job. We have global talent, which is for people with exceptional talent in specific sectors such as science, engineering, humanities, digital technology, and the arts and culture. But I must stress that the threshold for this category is very, very high. Equally, we have the innovator founder category, which is for someone establishing an innovative, viable and scalable business in the UK. But again, it's very tough, this immigration route. We have UK ancestry routes, which, although this is for Commonwealth nationals, it may be that you're a US national and you have a second nationality, which is a Commonwealth nationality. This is a great immigration category because it provides you with 5 years immigration permission to do whatever you like in the UK, so that's really flexible. And then of course we have the family route. So if you are a spouse or partner of a British or settled person, then you can come to the UK under the family route. And all of those categories that I've just mentioned lead to settlement, which is obviously a really big question for people. They want to know, can they settle in the UK and get permanent permission and eventually citizenship? But we do also have another immigration category called the high potential individual category, which does not lead to settlement, but it is a great stepping stone to get someone into the UK because it doesn't rely on you having a business. It doesn't rely on you having an employer in the UK. It's essentially based on the fact that you have graduated from one of the top universities outside of the UK in the last 5 years. So it is limited to those relatively new graduates, but as I say, it's a great stepping stone, giving you a couple of years permission to come to the UK and explore your options for the next visa route. And I think one thing I would say is don't choose your immigration application or route in isolation. Always look at your family, look at your spouse, your partner, because it might actually be that it's better for you to be a dependent on your wife's visa, for example, because being a dependent in most categories gives you the flexibility to undertake any work or self-employment in the UK. So we do that a lot. We think about, you might have someone come to you to say, I want to work in the UK, but actually so does your wife. Which one of you needs more flexibility? And then you decide on that basis.
Okay, brilliant. That's really interesting. And how do those routes that you've mentioned compare across other European locations? Does it vary quite significantly?
Yes, I mean, it depends on your circumstances and your ultimate goal and the timelines in which you want to secure permission. Some EU countries do have visas aimed at US nationals, like the Netherlands, for example, which offers residency in return for a pretty low capital investment in business. Portugal and Spain offer visas in return for proving you have a relatively steady passive income. And of course, we all know that many EU countries have the golden visas, which provide residency and a path to citizenship in return from investment. Whereas The UK, unfortunately, no longer has any passive investment route since the investor visa was closed in 2022. And this has made it very difficult for individuals, high net worths that want to invest in the UK. They don't want to be tied to any business. They don't have family connections in the UK. And they've been lately forced to sort of structure things where they're coming in with a business, sponsoring themselves. And unfortunately, the Home Office lately has been scrutinising those applications. We call them self-sponsorship applications. So that's been pretty tricky. So I think in answer to your question, yes, for investors, it certainly is easier to get a visa for, or certainly citizenship from a EU country. But it's important to note that following Brexit, if you were to secure permission and eventually citizenship in an EU country, that's not going to help you live and work in the UK. So the question is more whether you want to live in the UK or Europe.
Okay, brilliant, thank you. And what is it different for if somebody's got a particularly complex background, if they've already got dual citizenship or a third nationality? Is there any kind of different approach for somebody in that situation?
Having a second passport or a nationality can be enormously valuable, but I would always look at the legal consequences when acquiring it, as well as the benefits. You need to check the tax implications, of course, and also whether or not your current nationality allows you to secure that second nationality, because it may not. Some countries don't. In the UK, often residence in most categories will lead to settlement. And then once you've got settlement, this then gives you the right to live and work in the UK indefinitely. Once you've held settlement in the UK for 1 year, you can then potentially qualify for citizenship. If you're married to a British citizen, then once you've got settlement, you can immediately qualify for citizenship in the UK. So the exact route is going to depend on your circumstances. With regards to the EU, though, there's no single EU citizenship route. And I think this is a bit of a misconception. People think that, can I get an EU passport? There's no such thing as an EU passport. Each EU country has its own residence and nationality legislation. So the requirements within each member state are going to vary. Obviously, once you secure the nationality of an EU member state, that will allow you free movement around the EU. So really things to investigate when considering to acquire citizenship in another country is looking at your ancestry. Do you have an automatic right to any other citizenship? When you're looking at citizenship in another country, is there a residence requirement? Are you going to be required to live in that country for a long period of time in each year? Consider your marriage and family connections, because as I mentioned earlier, it may be that your partner has a right and a quicker route to citizenship in another country, and you can piggyback on that. Language requirements as well. When you're applying to acquire a citizenship of another country, frequently you're required to meet certain language skills. So in the UK, you need to sit an English language test or prove your English language skills before you can acquire settlement and then citizenship. And then also there are, in some countries, community integration requirements. In the UK, we don't have that yet, but there is legislation that's going through which will include that potentially as one of the contributing factors to acquiring settlement in the UK. And then just really to flag to remember about dual citizenship is not always permitted in all countries.
Brilliant, thank you. And we've got quite a few Americans on the call. I mean, are there any particular misconceptions that you see Americans have about relocating to the UK or Europe?
Well, for the UK, we do come across US nationals misunderstanding that having substantial funds to invest in the UK can put you ahead of the queue. That's not the case. As I mentioned earlier, we don't have the investor visa anymore, and your finances doesn't do that. Another area though is visiting the UK. We have limitations on what you can do as a visitor in the UK, and I think and this isn't just for Americans, but I think all nationalities, they think that you can come to the UK and you can work here for 1 day or 2 days, as long as you're employed and paid outside the UK and your ties and you live outside, that's fine. Unfortunately, that's not the case. Visitors cannot undertake any productive work in the UK unless you fall within one of the exceptions. And you also, with now we have remote working, you cannot remote work in the UK as a visitor unless it's incidental to your main purpose of holidaying. But obviously there are other countries around the world that do have visas aimed at remote working. The UK doesn't have that.
Brilliant, thank you. That's really interesting. And of course, once individuals have looked at properties and questions around their visas are settled, tax is usually one of the big topics. So let's have a look at some of the tax questions that we've got here for Simon. So what changes, one of the questions that's come in, what changes financially for a US citizen once they become UK or European tax resident, Simon?
Ultimately nothing. That's the challenge with US citizens. So the US is one of only a couple of countries that actually tax on citizenship rather than residency. So it's important to understand, or for a US citizen to understand their requirements when moving abroad. Now there are exemptions to that, so you can get the foreign earned income exclusion and you get foreign tax credits. But ultimately, your requirements and filing in the US never disappear. It's a lot more complicated than, for example, myself, who am based in Dubai. Normally, when I leave the UK, after a period of time, I'm not required to file in taxes. Excuse me. I'm not liable then going forward for certain stuff. So the issue is looking at where you're going. So the taxation treaties can give benefit to US citizens, but it does look at kind of where they're based and how much they're earning ultimately. But it doesn't mean that you're exempt from things as well. So a US citizen is required to file every year. Even children born abroad to US citizens ultimately still become US citizens, and their requirements still exist going forward. Now, there are ways that you can potentially ultimately get rid of that, but you would need to renounce your citizenship, which is not the easiest thing to do, as you can imagine, in the US, to do that. And you have to basically cut all ties and become not a US citizen anymore. But then you've got to choose to become a citizen of somewhere else. So again, that has complications of where you basically replace your citizenship with. So it is complicated. Like everything, there are things that you can do to mitigate certain things, but there's certain places in the US where you ultimately can't get away from certain filing. So in the US, you have obviously a dual way that you file. So there's certain states in the US, for example, California, New Mexico, Southern California, where you can't get away from your state tax. So there's things that you need to be very aware of, and that can be simply if you still hold a driving license, if you still hold voter rights, if you still hold property. So you really need to take tax advice on this, and we would say that usually it's cross-border. So what we focus on is cross-border advice. So we would have generally dual qualified advisors, maybe UK, US qualified, EU, US qualified, and then also for the tax as well. So you've got to be very careful on where you're doing that. Some people think that if they move away from a country, they've cut all ties, that's it, gone. It's not really the case. So it can get quite complex. And we had long-term residents before of different countries. I'll use the UAE, for example, where I'm based, where a lot of people have moved there for many years. I've been away from the US for so long, and they haven't filed. So they could be in for a very large shock from the IRS if they haven't filed their taxes. Even if there's zero tax to pay in the US, they could get a severe fine for not filing. So it gets quite complicated.
Yeah, and one of the questions that came in was about retiring and what's the most tax advantaged country in Europe for a retiree to move to? I mean, does that change in status change anything for if you're a US citizen?
It can do. Obviously, each European country is different. Portugal used to be the favourite. That used to be a big one, but that door kind of closed to new applications in 2024. So that was aimed at people that wanted to go there. It was quite tax advantageous, usually for an initial 10-year period. But that's changed now. So it's not so much of a favoured one, and Portugal's moved to more like a basis on skilled professionals that they will allow into the scheme. So that whole process has changed. It was a bit of a, not loophole, but a way that people wanted to Europe have a bit more of a favourable. I mean, you do have places such as Greece, which is only a 7% tax, Cyprus only 5% tax, Europe 7%. But then if you jump to places like the UK, well, then obviously you fall into the UK's scenario up to potentially 45% tax. So you really have to look at kind of what the main reason for. Is it a lifestyle move, or is it a financial move, maybe for job, that you're looking at? And then again, you need to kind of look at that, because along with that come all of the assets you have, your pension, your other assets you might have your multi-jurisdiction based assets as well. And again, where are they filed and where are they reported? You may then take a job in the UK or Europe and you might start incurring a pension. So again, you need to look at where that plays, and all your assets from abroad. So in the US, your pension, your 401k, again, how that would then be accessed if you were taking a long-term residency in Europe, for example, on the ways that that's taxed when you start to take income from that as well. So it's quite a complex scenario, but it would generally, like with any move that you do internationally, the planning in advance is super important, because you know then what you're in for, if you like.
Yeah.
But yeah, I mean, the US, I mean, most US citizens will know that it's quite a complex process, and actually you're always going to be a US citizen and you're always going to be expected to file reports, and also you're probably liable for tax worldwide on all your worldwide assets. So it's quite a different system, for example, to the UK, someone leaving the UK. So there is a lot to think about. Advice is super important, and that's advice in the US and where you're planning to go to as well. Because typically a US tax filer will know the US system inside and out, but they'll have no idea on what the UK or the EU system is. So you need that cross-border advice. And typically you'll have 2 different tax advisors that you'll speak to. One in your country of residence, US, for example, and then one where you've moved to make sure your filing is covered from both sides, because it does get complex. And then you've also got to bear in mind things like banks. A lot of banks now and investment companies will not take US citizens. So it's become quite complex. So you can't just go to the UK and open up a bank account, as an example, because they won't take US citizen because the FATCA rules. So it's very difficult on that. So you might have to use your US account, and then you've got issues on currency, and that's where Steve can help out on there, because you may have currency issues all the time. If you haven't moved money from the US into the EU or the UK all the time, you've got a huge currency risk. So there's a lot there to bear in mind. But with all these things, the earlier you plan for, the better. The more time you have in your hands, the quicker you start looking at it, the better. Making that move and then looking at it later is where you're going to cause a problem, because you need to make sure your filing's up to date. We need to make sure everything's above board and everything's clear, and that you don't get any surprises, because the IRS don't mess around. They like to tax, they like to go after people. So you have to be very, very careful on that. You don't want a huge surprise when you've gone to another country. Even if you went to somewhere like the UAE, which is obviously zero tax, there's still a lot of potential tax liabilities for a US citizen going there.
Interesting. Thank you so much, Simon. And how, I guess, a 2 kind of prong question, how important is the kind of inheritance tax element of a move taken into account for most of the people that you speak with? And how do those rates of inheritance tax compare across European countries? Is there kind of particular countries that stand out if that's an important factor?
Yeah, of course. I mean, different countries have different inheritance tax rules, so they do vary, and that's changing all the time. So the UK's moved to a residency-based system if you move abroad, rather than being a domiciled one. So for someone like myself, I've been outside the UK for more than 10 years. I then am now exempt from IHT in the UK. So that's going to change a lot for me. But for other people, they can't get away from that. So a US citizen has a very high inheritance tax level as a US citizen. So in the UK, we have 325. In the US, it can be as high as 5 million once you put all the assets in place. But that changes obviously when you go to different places in the UK, for example, where obviously you would fall into the UK system. So potentially 40% inheritance tax. Now, there are other places in Europe that have abolished inheritance tax. But there might not be somewhere you want to go. And obviously, if you're making a move abroad, which is usually lifestyle or career-wise, you're not necessarily looking at where the inheritance tax is the lowest to move to, because normally there's some reason that you're moving, family or job, that's doing that. So you've got to be very careful of doing that. And again, looking at those and what benefits you can still use via the US through maybe some double taxation agreements that are in place. And that's super important as well, because that can also help. The other thing to bear in mind is the type of assets you hold. So you don't want to get caught by moving to the UK or Europe, changing your investments, and suddenly they become what's known as a PFIC, a passive foreign investment company, which is taxed a lot heavier than the US asset. So there's other things that you do, and restructuring portfolios is super important. You look at that as well, because you might go, I'm in the UK, I'm going to align it to a UK portfolio, but that could actually put significant tax liabilities on the portfolio you have being non-US assets.
Okay, interesting. And if you're somebody that's got investments already spread across several different countries, is there a way to kind of bring it together into some coherent plan?
You can't necessarily consolidate lots of things, because typically they're tied to where they're originally taken out. But what you can do is obviously have someone that's looking after those. So someone moving to the UK or Europe that has pensions and other assets in the US needs advice on those as well, because it depends how they're drawn and where they're drawn, and the tax that's done, the tax that's liable on those, and can become liable in different countries. So you could pay tax in two places on those assets. So having a cross-border specialist is super important. Someone or an advisor that is qualified in the US and in the UK or Europe is super important, because they understand both sides. They understand what the reporting requirements are for the US, what the types of investments that a client can use, and also the types of things the client can invest into in their new location. And that's important as well, because you don't want to cause a problem by having a client invest into new things where they maybe can't, although they could do as a UK resident or a UK citizen. So there's lots to bear in mind with that. Now, having assets across the world is not an issue, and that's quite normal for an expat or a mobile citizen that's moved around their life. They might work for a big company and they've been moved every few years. So naturally, they're creating assets in different companies. They started pensions in different countries, and all of that needs work and to be looked at where best to manage that. And then you need to know what sort of advice and what sort of products you can use to do that. For example, in Europe, there's different types of taxation and products you can use for different pensions. And an American typically will have a 401k, IRAs, which are their sort of pension and saving schemes that you have in the US, pretty normal. And the US citizen's very au fait with saving, much more than the UK resident. It's drilled into them from the start. So they will generally have built up quite big assets. So again, those assets, not something you cash in, because you might have liabilities by doing that, but it's how you access those assets and the limits that you can do with those in different locations. That cross-border advice and having an advisor that knows that's super important. And again, the early you engage with somebody for that as well is super important, because they will give you advice on what's the right places to go to, what limits and what benefits you can get by moving abroad. And there are exemptions you can get as a US citizen in certain locations, but it depends how high your liabilities are in the US and what income you had in the US that can do that. So it's really important that you do that. And then again, when you come to actual retirement and drawing income, where and how best to do that, and where is that taxed? Now, for some clients, it may be sensible to renounce your citizenship if the move abroad is forever. If you know that's going to be a one-way ticket, then fine. But the problem nowadays is you can plan for that, but then sometimes the reality is it's not a one-way ticket. Something changed with family, and then you've still got those ties. So it does become quite difficult to do that. And I don't think anyone can put a stake in the sand. So I'm 100% going there, never coming back. And that changed significantly in COVID. We saw that massively change, where people wanted to be globally mobile. And actually we see nowadays clients maybe split themselves across 2 or 3 different jurisdictions, because one's their tax residency, one's a holiday location, one's where they like to go. But you have to choose a location for that. You have to be a tax resident of somewhere, not a tax resident of nowhere. So you can't literally stay on a cruise for a whole year and avoid tax by being a resident of nowhere. Like, the idea is nice, and it was something that did exist. There was a famous cruise that enabled you to do that, but you can't be a tax resident of nowhere.
No. So if somebody remembers just one piece of advice from a wealth and tax planning perspective, what would it be, Simon?
It's get advice, and the earlier you can do it, the better. Engage with who you currently deal with, and most US citizens will have a tax expert they deal with, or a tax filer in the US they deal with. Explain what your plan is and where you're going. Find a good cross-border specialist that covers the location you're moving to. So, for example, we cover all continents. We typically have offices in key locations that cover that, and we're licensed and regulated in all of those environments through the different regulators that operate under those jurisdictions. And then make sure you planned well in advance. I would say it's got to be a minimum of 6 months before you make that move to be engaging, because you've got different tax filing requirements in different locations. For example, the US is January to December, the UK is April to April. It's very different. So you could be caught in cross-country reporting at different times of the year. And when you make that move, super important as well. Are you making a clean cut at the end of 1 year, or are you caught in the middle of 2 years where one country is more favourable than the other, and then there's reporting both? So the sooner the better is the answer to that, and engage with a cross-border specialist that understands that.
Brilliant, thank you. And George, just to confirm, I have got your question. I'll come to that very shortly. But firstly, before we come to that question and any others that come through, currency is potentially one of the last things that people think about, if it even comes to mind, actually. So it can be quite a significant impact, can't it, Steve? And you're going to tell us all about it. The timing of when you decide to make that currency transfer and move money internationally can cost or save you quite a significant amount of money. So Steve, this section is all about moving the money. People can transfer money through their bank, which I imagine for actually a lot of people, that's the kind of default position. You bank with somebody, I'm going to let them know that I'm moving money and go to them. But we know, of course, that there is a difference between utilising a bank and a specialist currency provider. So do you just want to tell us a bit about the difference between you guys and using a bank?
Thank you. Yes, there's a huge difference, hence why our industry exists. It's something that is increasingly more common and aware of across Europe, but for everybody listening or watching the recording sitting in the US, it's an industry that they probably haven't come across, and they'll just go to the bank. The currency will be the last thing on the to-do list, and they'll just go to the bank and that's it. Where we're most in demand for is two factors. First off, when we started doing this 25 years ago, it was all ultimately around providing a better price than that of the bank. And again, in the nicest of ways, if we couldn't do that, we wouldn't be here. So clients that are listening and watching this and considering their budget, ultimately will be able to save money, enabling you to hopefully get a bigger property that you're dreaming for the money to go further, right? In our space, and we've had over 1,000 5-star reviews in the last 12 months, the general theme in them is the fact that you get a single point of contact around a very emotive moment. The fact that we're outbound calling and informing them around how these economic and political events that are happening around the world has a real world impact to your budget. When was the last time the bank rang anybody? But really it's around risk mitigation. So trying to time that transfer correctly so that you can try and get the most for your money. So to give it some idea, we've seen the pound euro exchange rate move by about 1.5% in the last 30 days. We've seen the cable price, that's the pound dollar rate, move by about 2.5%. The fiber price, or the rate from the dollar to the euro, is again about 2.5%. So this makes a sizable impact, even in a 30-day period, of how many bedrooms the property has. And there's a number of stories there that we've helped clients very recently and over the years that we've done it, where it makes a sizable difference. So yeah, the reason why I'm here is the same as the other experts here. It's around talking to everybody early to make sure you're aware of that and can forward plan the options that you've got to make sure you can make an informed, educated decision on it.
Brilliant. And when it comes to utilising Lumon as a specialist currency broker, is there a cost involved to having an account with you?
No, all of us offer free facilities, free accounts, free conversations. There's no cost to transfer funds in, to hold funds, to release funds. How we make our money is in essence a very small difference between where we buy and where we sell our currency. So it's built into the exchange rate the client receives. And ultimately, we're in essence undercutting the price of the bank, therefore providing the benefit. That's why we're here, while adding a very personal level on top of that and a proactive service to try and help with the timing of that transfer. So simple terms, there's no cost to speak to us and to use us. There's no cost to open up an account. One of the big misconceptions is either that people think of us too late. Really, it's got to be earlier with the movement. You know, how many events have we seen in this Trump era that have changed the world, and we're getting all a bit used to, but it's evolving at a pace. And the second misconception is that people say, well, I can't speak to you about currency because I don't have a destination account yet. I don't have an account where I want to send the funds to. You know, to Simon's point, getting a bank account in the UK or Europe, you traditionally need an address to be able to do that. We were introduced to an American a few weeks ago, and we were introduced on the Thursday, and by Tuesday we locked in an exchange rate for them and moved $1 million over. They did that before they got on the plane to come to Europe. So they looked at the currency before the property because the budget was in the right place and they didn't want to be exposed to a negative movement, which could have impacted the budget and the cost of the property they'd fallen in love with, even though they hadn't actually visited the property yet.
Interesting. And for Americans specifically, is moving money from US dollars to pounds or euros any different to a typical UK to Europe transfer?
No, it's in the same kind of way, same kind of format and everything. It happens at the same kind of speed. The other thing to consider, especially if people are global clients, they'll experience what we call capital controls, as in how much they can move a day if they're not in the country where the account is set. We can also mitigate that because we've got over 800 accounts around the world, so they consider domestic rather than international transfers to help. It's all around our service of making this as easy, quick, secure, and saving as much money as possible for the client.
And we talked about that example where they locked in a rate before they even went to have a look at properties. I mean, is that typically how people protect themselves against adverse exchange rate movements? I mean, how did that individual know that that was the best way to proceed, I guess?
Well, unfortunately, there's no crystal ball, so we don't know the answers. But what we do know is we can give the information and education around what the market is doing. So when a client engages with us, we'll do a quick ID check to make sure that they're them and not pretending. That again is free with no obligation. Then you'll have a free currency consultation with your dedicated account manager, at which point they'll go through the availability of capital, the time frame that you're looking at moving the funds, and over that period then go, well, here's the rate, here's the trend, here are the days and events coming up that could be positive, that could be negative, here's what the banks and the facilities and forecasts are suggesting. In essence, here's the upside, here's the downside. How do you want to manage that risk? So whether or not you do all of it, some of it, none of it, average weight trading, whatever it might very well be doing. But the really important thing to kind of bold and underline is the world we will live in is evolving at such a pace. Those events we see in the media have a real impact on people's budgets and the property they end up with. So we're proactively helping with that. And there's a number of other tools that we use to clients' benefit as well, over and above that the banks will often not even mention or offer.
And so what's the biggest mistake then that you tend to see that people make with their currency planning?
Again, it's normally last on the to-do list, and hang on a minute, X doesn't equal X anymore. I can't afford it. I need to raise more debt. I need to save money here. Or it'll be the perception that they can't speak to us because they don't have a bank account yet to send it to. The other common piece is once people are educated and aware around how much volatility in the market is, there are some clients that have a view that they'll roll the dice on it. They'll play it out with a hope that it will get better. Often, I'd add, with no economic or political argument why they think it might get better, just they have a feeling. And they're often the clients that will come in 2 a.m. And even though we do extended hours to cover the world, we'll often come into emails from clients that has been written at 2 a.m. and they're not sleeping because they realized how much of an impact it has and they want to talk again. So yeah, they're the top three. I'd suggest. I appreciate you asked for one, but there's three.
Brilliant. No, that's great. And I'm going to come to George's question because I think it is an interesting question. And for everybody else's benefit, the question is, at what stage in the thought process, an actual process of moving from the US to the UK, should somebody consult with each specialist when it comes to immigration lawyers, real estate, buying agent, wealth manager, tax accountant, school consultant? How do you get the order right? And I'd be interested to know if there is a kind of one size fits all answer if everybody agrees in the order of the process, or whether there's actually differing opinions. I mean, Steve, you have commented in the box to say that you believe, from your perspective, to get immigration and tax and wealth done in the first instance, and then currency and property at the same time thereafter. So that's Steve's perspective. I don't know, Ed, do you have a different perspective? Do you agree?
Well, I think actually it also depends on the quality of each of those individual people and the companies they work for. So to my mind, a good estate agent should be able to connect you with a lot of those other people whereby you're initially making contact, and then they will come in at the appropriate point in the process for you, and that might vary from situation to situation depending on whether you need to transfer currency and how much, etc., in your immigration and tax sort of position. So yeah, I actually sort of see probably the estate agent in this process often as the first person you should go to, and a well clued up estate agent or buying agent, as I mentioned earlier, may be able to then connect you with their sort of a team of their suite of sort of people that they'd recommend you deal with for those individual elements.
Brilliant. Thank you, Ed. Simon, from your perspective?
I guess it's led by what the move is and where you're planning. So if it's a career move, that's kind of going to dictate where you're going and might dictate where you're going to live. So that will have some aspects on there. And again, it's looking at when is that? I mean, is it a decision that the company's going, right, you're moving in 3 months? And then actually it's fast tracking everything to get that done. But usually a lot of those companies, big US companies, will help with that, and they'll have one of the big 4 tax companies that will help them with that move as well. So that's usually in place for that. But typically, yeah, the earlier the better on it. If you're planning for it and you're going involved, I would say actually, if you're moving somewhere, you move your whole family, the property, the location is probably the first one on there, because where are you going to live? And obviously that process isn't necessarily quick in the UK if there's change and things involved as well. And that can all fall out. And we see people moving all the time as something that they wanted to buy has suddenly changed. And then that might delay it. Quite often we see people when they relocate rent initially, because that's a good way to find out where you want to be. And obviously that process is a lot quicker to do when you're making that move. And then maybe they don't need to move money at that point initially because they don't know what they're going to buy. But the important part is obviously all the other aspects of it. What's the tax liability is going to be? What are they doing with their current assets? Do they then sell a property during that journey and end up creating a load of other cash and other wealth? And when they do that, so from our point of view, it'd be between sort of 6 months to 1 year planning to make sure that's the case. But yeah, usually when you're moving somewhere, as Ed said, you will have those connections in place. We go, actually, fine, this is where you want to move to. Okay, we've got the connections for X, Y, Z, and obviously that's great with what Finding Country is doing, because the point is bringing all these experts together. It's going, we can help you with all of that and interconnect with all of that side of things as well. So I think that's one major advantage, obviously, what we're discussing today.
Excellent, thank you. And Natasha, from your perspective, any differing views?
So it really depends, I know you keep hearing this, on the circumstances, but it's very true for immigration, because on the one hand, we can process some visa applications within a matter of days or weeks. But that would be in the circumstance of a worker who's employed overseas by a business, and they are going to come to the UK as under sponsored employment. If you're willing to pay all the priority service fees and you've got good lawyers and you're going to provide all the information quickly, we can turn that around incredibly quickly. However, on the other hand, if you're coming to the UK under the family route, then that can take a couple of months, so not weeks. You've got to prepare for that application. You may be having to prove that you have a certain amount of savings in your accounts. For family applications based on cash savings, you need to have held those savings for 6 months. So you need to know. It depends on the route. I will say though, the UK processes applications far quicker than the US and many other countries. We are very good at that. It's a very transparent system as well. We have priority services. But anyone that's thinking of coming to the UK, I would say if they want to put a timeline, at least 6 months before. 6 months before you want to be in the UK, contact an immigration specialist to find out which route you're going to be going on, and then you should be fine.
Brilliant, thank you. So last few minutes of the webinar, and Simon, I'll come to you quickly. We've covered a lot from a wealth and tax perspective, but is there a question that I haven't asked you that I should have asked you? If so, let us know what that is. If not, what's your kind of key roundup takeaway for everybody on the call?
Obviously it's a complex thing. It's a complex scenario when you move. There's so many moving parts involved. I mean, the good thing is the US, the UK, EU systems are fairly understandable, and there are certain benefits or exemptions people can apply for, but it's understanding those and making sure they're using those to the best of their advantages. And there are a lot of things that the US citizen can do if they're moving to the UK or Europe, for example, and they're not actually generating any income in that country. Foreign income, such as pension income, is taxed more favourably generally, rather than money or income sort of generated in the new location. So there's advantages there as well that someone can look at. So it's not a bad thing to look at those moves and do that. And there are locations that are certainly better than others. Obviously, if we use the UK, that's fairly tax heavy, but we understand what the system is in the UK. It's quite clean cut. And then again, it's taking advantage of some of the exemptions that exist and work out that planning to do that. And there'll be a number of people that brought into that. So as wealth managers, we would always involve our tax and legal teams as well, because it's more complex than a wealth manager just looking at that. And then it would be someone like myself and maybe one of my colleagues as well that specialise in certain areas. So for example, I might look at the UK side and my US colleague would look at the US side. So we generally have a sort of multi-prong approach with it, looking at that as well. And again, I think allowing a 6-month window is probably the minimum to do that, because there's going to be pretty much everyone on this call involved in the whole process. So I want to make that move. So, and you also need to connect those people together as well. So if it's peak holiday times, maybe people on holidays might delay things. So again, you've got to look at that side of things. But yeah, earlier the better. Plan for it in advance. Speak to people, and most people will offer free initial advice on it as well. So we would do the same. We'll have initial consultation with the client, and it's obviously only when we go to a licensed advice piece that then obviously charges would come to play. And generally, most people have an initial no obligation conversation with the client just to kind of get the feelers there and the understanding of what's happening. When it's a bit more concrete, then obviously it goes to an advice stage, and then it will be obviously formal advice would be done. And again, that can take a little bit of time. So producing reports for a client, regulatory requirements we do, can take us a month to produce. So that's why I would say the minimum 6-month period is better for the client making that move.
Absolutely. And Natasha, any final thoughts from yourself?
I think very much in line with what everyone else has said, preparation is key here. And also be open to considering other options. People always go into these things thinking, oh, this is what I need, this is what I want, or they've gone on AI, and but just be open, give yourself time, and instruct a specialist.
Excellent. Thank you. Steve, any final thoughts?
I'd emulate like the rest as well, to be honest. In essence, Google isn't your friend in this. AI isn't a wealth expert, a tax expert, immigration, currency, or property, right? They're incredibly useful to get more knowledge before you go into these conversations, but often they're based on changes in the distant past. So if you want the latest, that's what we all do as an expertise. Hopefully, we're all coming across as pretty knowledgeable and friendly. So please do engage and have a conversation with us to explore it in a bit more detail with your personal circumstances, what I'd suggest.
Brilliant. Thank you. And last but not least, Ed, from your perspective?
Well, just really, if anyone's sort of a bit nervous about the weather in the UK, you needn't be. It's 35 degrees here at the moment, and I mean, I don't really operate above 30 degrees very well. But you know, if you're worried about the rain, we haven't had any. So you know, glorious, beautiful British summers are the way forward potentially.
They do exist. Thank you to all of you for contributing to this webinar today, and thank you to the attendees for jumping in, submitting your questions. We really appreciate it. As I said at the beginning, we will share the recording as well as everybody's contact details, so you will get that to come through. And just to confirm, Finding Country, myself and Ed represent the business, and any questions when it comes to moving, we are in over 300 locations worldwide, so across Europe, across the UK. So please do look at the contact details afterwards, and we'd be happy to put you in touch with the right agent on a local level as well. So thank you so much for taking part, and we wish you all the best with the journey, whether you're investing or moving. Good luck, and thank you. Thanks to all of you guys as well. Have a great evening and enjoy the eclipse.
Thank you.
Everybody.
Bye.
Take care. Bye.